Did you know that Bill Ackman's real name is William Albert Ackman? I've been looking and I've now discovered that Bill Ackman isn't his true name. For today's video, we will be going to talk about Bill Ackman, 10 books that made him billions. Let's get started. Security analysis. Anyone who trades or intends to trade in the stock market should read this 1934 classic for investors. Graham offered a precise definition of investment in security analysis. One of that set it apart from what he considered speculation. It read, "An investment operation is one which, upon thorough analysis, promises safety of principal and an adequate return. Operations not meeting these requirements are speculative." The book represents the genesis of financial analysis and corporate finance. As per Warren Buffett, this book is his Bible. Wall Street has evolved significantly since then, but the idea of investing in undervalued companies hasn't. This book takes the reader to a time when lawmakers were still absorbing lessons from the Great Depression. The book's main lessons were to research a company's soundness before investing in it, and to evaluate common stocks according to their earnings, dividends, and asset value. Wall Street was criticized by Graham and Dodd for its emphasis on a company's stated earnings per share, and we're especially critical of the preferred profit trends. They encouraged investors to adopt a completely different strategy by estimating the rough worth of the functioning firm that was the securities foundation. The Warren Buffett Way. A book by Robert Hagstrom describes the value investing business and investment strategies used by American investor and businessman Warren Buffett. The book distills the essence of Buffett's strategy into 9 simple principles that can be utilized by investors of all levels. The life lessons from the book truly are timeless. The big idea of the book is to act independently. You are neither right nor wrong because the crowd disagrees with you. He wrote, "You are right because your data and reasoning are right." Buffett genuinely believes in his own ability, and he has diligently gathered information in his research so that he may make conclusions based on facts rather than popular opinion. This is the essence of Buffett's investment criteria. Find reputable businesses that are well established in a sector you are familiar with and are, for whatever reason, currently undervalued. Then place a big bet. You'll see that Buffett's standards have little to do with the most recent stock prices, media hype, or general public sentiment. Indicators of companies that meet the other requirements can surely be found in the news, but Buffett ultimately seeks out leaders who demonstrate trust, honesty, and value. His theory is quite basic. Invest in what you are really knowledgeable about. His book has a message for us all. Confidence Game. How hedge fund manager Bill Ackman exposed the deception of Wall Street. The focus of the game is Bill Ackman, Pershing Square Capital Management's founder. He identified MBIA, an insurer of municipal bonds, as being systematically significant, but grossly exaggerating the amount of danger it was incurring. As was to be expected, Ackman's position created quite a stir and intensified investigation. Regrettably, the examination was focused on Ackman and his firm rather than MBIA. Even the media participated in the attack, with the New York Times and the Wall Street Journal adopting a highly critical tone towards Ackman, while ignoring his arguments and jumping to the NBAA's defense, with a specific focus on Bill Ackman and his campaign against monoline insurance giant NBIA. Christine Richards' Confidence Game is an intelligent, topical, and entertaining high-speed trip into the frequently tough-to-penetrate world of short sellers. Beating the Streets. The famous money manager Peter Lynch provides guidance on how to choose stocks and mutual funds in order to put together a profitable investment portfolio. Peter Lynch advises investors to conduct their own research before making an investment, rather than relying solely on media hype. In a manner similar to that of Warren Buffett, Peter Lynch selects businesses that, at the time, are not of interest to Wall Street, but have strong balance sheets and promising futures. Wall Street masterminds, pearls of wisdom, are sprinkled throughout the book and are sure to be helpful for both newcomers and seasoned investors. Quality of earnings. The primary emphasis of the book, as implied by its title, is on earnings and the quality of those earnings. The reasons why you shouldn't trust analysts, auditors, letters to shareholders, and disclosures in the Admiral's annual report are covered in the first 5 chapters. But it's not just a simple dialogue. The author gives numerous examples throughout the book, including going through a letter to shareholders and contrasting what the CEO claimed with the actual outcomes. The apparent moment to inquire about a firm in full is before you decide to buy it. However, the lessons in the book enable you to spot the errors before they are made public. Selling a position that is losing value could resist insignificant financial savings for you. Margin of safety. For the careful investor, risk-averse value investing tactics. In his much-praised book, Seth Klarman discusses the value of having a safety margin. Every investor's top priority should be to prevent loss. By investing with a sufficient margin of safety, one can avoid loss. A margin of safety is necessary because valuation is an imprecise art, the future is unpredictable, and investors are human and make mistakes. Diversification, after all, is not how many different things you own, but how different the things you do own are in the risk they entail. A diverse portfolio of exorbitantly priced subordinated securities, each of which the investor understands very little about, is in fact extremely dangerous. According to this theory, an investor is better off understanding a lot about a select few investments rather than a small amount about each of a large number of holdings. The Intelligent Investor. It is regarded as the investing holy book. Warren Buffett refers to Benjamin Graham as the greatest instructor in the history of finance. So if you were ever on the fence about reading this book, take his word for it, and claims that this is by far the best book ever written about investing. It should be read by everybody who wants to invest in individual stocks. In the contemporary market, when stockers are frequently valued above or below their genuine worth, this offers chances for knowledgeable investors to pick up exceptional businesses at a discount and then outperform the relevant market benchmarks over time. There are 3 principles to intelligent investing. Analyze for the long term, protect yourself from losses, and don't do crazy profits. One Up on Wall Street. The second on the list by legendary fund manager Peter Lynch shows that practically anyone can become a successful investor, and not only the Wall Street financial experts who are disciplined in their work and have done some stock analysis. His advice is that only invest in what you can afford to lose, without that loss having an effect on your daily life in the foreseeable future. He places a strong emphasis on ensuring one's financial stability before entering the realm of investing. Lynch provides instructions for separating the long shots from the no shots by spending just a few minutes with the company's financial statements in a language that is simple to understand. His advice for producing 10 baggers can turn a stock portfolio into a star performer. You can be a stock market genius. The book describes a variety of so-called special situations, such as bankruptcies, restructurings, and spin-offs, that may present very profitable chances for the investors willing to deviate from the traditional path of investment. Joel Greenblatt, a famous author, emphasizes the significance of a set of fundamental guidelines for exploring the world of special circumstances. Do your own work. Don't trust anyone. Pick your spot and assess the downside, not the upside. He diverts the reader's attention from the main topic at hand by talking about a variety of so-called exceptional situations and how you might be able to identify, evaluate, and profit from them. Risk arbitrage, merger securities, bankruptcies, restructurings, recapitalizations, leaps, warrants, options, and spin-offs are a few examples. In the world of unique circumstances, you will frequently find yourself off the beaten path. You'll be considering unique scenarios carefully. You'll move mountains that few others do. You must therefore complete your own task. You won't discover much research from other experts or the media. If you do, don't believe what you find. The Essay of Warren Buffett, Lessons for Corporate America. Anyone who wants to understand how one of the most renowned money managers of 20th century functions should read the book, The Essays of Warren Buffett, Lessons for Corporate America. Author Lawrence A. Cunningham summarizes the important learnings from Berkshire Hathaway's yearly letters from 1979 to 2006 and The Essays of Warren Buffett's Lessons for Business America. What makes the book so memorable? Cunningham maintains the integrity of Buffett's words from the letter while reorganizing them by a theme to make them much easier to learn from. This method of organizing the books also makes it easy to see how Buffett's core ideas have evolved over time. There are nearly 50 books with Warren Buffett's name in the title, but this one is his favorite. Buffett frequently discusses clever investing. Mr. Market is one of the three primary components he keeps returning to: safety margin and competency circle. What is your favorite book? Please let me know in the comment section below. And if you like this video, please give it a thumbs up, turn on the notification bell, and subscribe to Wealth-ology for more videos like this. Thank you for stopping by to watch. See you in our next video.